Welcome back to Stock Spotlight. I'm your host, Michael. This is episode 33 of the podcast, and today we're diving into one of the more polarizing companies in the market right now, Rivian, ticker symbol RIVN. I'll be upfront here. I'm not an EV super fan, and I still drive a 2016 ICE BMW. I also own Ferrari through race, at least for now. And philosophically, I probably lean more toward hybrids than full EVs at this stage. But Rivian kept showing up on my radar. I live in Southern California and stopped by Rivian's Laguna Beach demo space last year just to check out the vehicles in person. And honestly, the products felt pretty premium. The branding was clean. The vehicles felt differentiated from the typical tech appliance on wheels vibe that a lot of EVs can have. So you have this interesting setup where the products seem to resonate with a certain customer, but the stock has been a very different story. And that is why I wanted to bring on someone who has spent a lot of time studying the company from both a financial and strategic perspective. And so that's why I invited @Position Journal on X to join me on the podcast. He recently put together a deep dive that got some solid traction. Now, enjoy the conversation and let's get going. Thanks for joining the podcast.
Thank you for having me. I appreciate it.
So we'll get right into it. Before we get into the investment case, though, can you give listeners just the simple version of what Rivian is today, what the company sells, who their core customer is, and then how they make money?
Yeah, for sure. So Rivian, in its simplest format, they sell premium adventure electric vehicles such as the R1T pickup and the higher end R1S SUV for their consumer side of the business. Then for their enterprise side of the business, they sell the commercial vans, which is the Rivian electric delivery vans that you see Amazon drivers outside. And then there is also the software segment where they're essentially making revenue by from like licensing fees and then the early stage autonomy plus subscriptions.
And then most people probably know Rivian for the R1T pickup and the R1S SUV. Could you quickly explain those vehicles and then also explain what the R2 is, which everyone's excited about?
Yeah, everyone's excited about it. It's a very, very big deal that I hope we'll get into it. So to start off, the Rivian lineup scales vehicle size, features, and price to different buyers. So the Rivian R1T is an electric truck with a 4.5 foot cargo bed that can haul about 2,000 pounds, tow up to 11,000 pounds. And then depending on the battery size, you can have between 270 to 420 miles on a single charge. This is essentially for the customer segment, who are adventurous or who need a pickup truck for their day-to-day work, but while maintaining the luxury experience. Then the second flagship vehicle is the R1S. It's a luxury SUV that replaces the truck bed with 3 rows of seats for up to 7 people, and offers also a similar range between 270 and 410 miles. But it's mostly for big families who want comfort and the off-road capability. Now, what's coming up is the bridge between them. So this is the Rivian R2, which is a smaller mid-size SUV and targeting so easy driving, weekend trips, with a range also between 275 and 330 miles. It's the mass market SUV, which RJ and the team intends to be the biggest financing engine for the company. It's essentially, you want an SUV that's not too big, it's not too bulky, it's easy to park, and it's electric. It's an alternative electric vehicle to the Tesla, and while maintaining a unique niche experience where you're in the car and both like the technology and the car itself, so software and hardware feel pretty integrated. Yeah.
No, yeah, that makes a lot of sense, and that's kind of what I've seen too. And I wish we would have had one on our recent road trip. We actually took a minivan up to the mountains with my 2-year-old son, and my sister came in town, and we passed by several Rivians on the freeway. And I definitely think it would have been a more fun ride than the minivan that we got.
I expect like start seeing a lot more. The big things about the R2, it's it's yes, smaller, simpler, and according to some of like the modeling that I made, it's going to be approximately 50% cheaper to build. It still maintains that like the adventure vibe that the previous models had, and it's going to be very interesting to see how like the marketing campaigns go, how the adoption goes, how the reviews goes as well. There was a Wall Street Journal article that was recently published. Very, very good reviews stating everything from design, functionality, looks, and the author, was had very favorable impressions of it as well.
Yeah, and I was telling you a little bit pre-call before. I've been watching a ton of YouTube videos myself on early reviews, and most of them are really positive. And the thing that I like, as a non-car expert, if you will, is that it does look a lot better than the Tesla too. And I think one YouTuber said that is, at least it doesn't look like an egg or something like that, which I agreed. I really have never. We have a ton of Teslas where I live in California, and the Rivian just looks so much better. So I think it's definitely going to appeal to some new customers, and even take away some current Tesla owners as well. So next, let's talk about the the elephant in the room. I think everyone agrees, or at least a lot of people agree, that they do have a cool brand and a lot of product love. But owning the stock itself has definitely been a bit of a bumpy ride. If you had to explain to someone why customers seem to love the product, but shareholders have had a more painful experience, what would be the simplest explanation?
So customers love the product because, I'm a product manager, and I could really see how well defined their customer segment was, their user research. Everything in terms of features and capabilities that you have in the Rivian is truly fit for that market segment, right? Like the pickup truck. I'll give you an anecdotal experience. I went to a landscaping company, and the guy had an R1T pickup truck. When I was asking about it, he loves it. Why does he love it? Because he has the fuel savings from it, and he can use it for his day-to-day job of like hauling, like compost, hauling his tools and everything for his work. You clean it up, then you now again have the luxury experience, especially while you're inside the cabin vehicle. Now add to that, you also have like actual off-road and adventure capability. It really differentiates itself, something between like like a Jeep or a Tesla, like something. They really found that perfect, in my opinion, niche of customers to target, which is why the product fit and value has been strong, especially from some of the surveys. Like there was a customer satisfaction survey where 85% of customers loved the Rivian. I'd have to remember where it was from, where it was cited from, but then there was another study where the percentage of customers who are willing to repurchase the same brand for Rivian is growing year over year. So there's a lot of both anecdotal of what I mentioned and quantifiable evidence that shows that the customers love the product. Now then we go on to the next piece, which is the stock is not the company, and the company is not the stock, which is how Bezos had once put it, and it's very very precise. The reason why it has been painful, it's very simply they are spending more money than they are making. Just in the last 5 quarters, for example, it was about a $700 million quarterly free cash flow burn, essentially. This is being spent all on both product development, research, marketing, as well as scaling both the production facilities and general overhead. And it's been like that since IPO, really. So since IPO, I think it started off roughly around 120 or $130. It's now at trading at $18. So we have about an 80% reduction. And it's because of the simple fact that they're burning more money than they're actually generating.
Yeah, it's interesting you mentioned that, just because another area that I've been looking into has been the aerospace and defense industry, and there's a ton of new companies that have IPO'd in the last few years where they might be EBITDA positive, but they're definitely gap negative. And you have to really, as an investor, I think, do a little bit more due diligence than you would on an SPGI or a company that maybe people know and is fairly predictable. But it's definitely worth the work because, to your point, I actually work in customer insights professionally too, and so I loved hearing all the NPS and some of the other metrics I think you were kind of talking about a little bit, and I think sometimes that's actually the hardest thing to get right in certain businesses, and that's why companies struggle. So the fact that they've kind of gotten that worked out, now it's kind of about what they, the path they have forward and their strategy. So I thought also I wanted to ask you the timing of this conversation is interesting because they just announced, I think it was like a $75 million share offering, maybe to fund equity contributions associated with the DOE loan arrangement. I think the stock got hit a little bit on dilution, but how do you interpret that? Is that even worth talking about? Is it a big deal? I just kind of saw that and wanted to ask you about it.
I think it shouldn't be ignored, but I don't think it's a big deal. So the way that I thought about it is, I think it ended up being originally it was 1.4, but I think it ended up settling at $1.2 billion. And you either dilute, issue more shares, you dilute, or with the cash on hand that they had available as of Q1, which I think was 4.8 billion, you pay 30% of your liquid cash to fund your upcoming obligations. So in that sense, that I feel like RJ has made the right decision for the long term. Yes, there's going to be pain in the short term, which we saw. I think it went Rivian was trading at 20. And then dropped down to 15, and now it's back up to 18. So to me, this also shows that, like what I'm mentioning, it's shouldn't be ignored, but it's not a big deal. Why? Because coupled with that statement, Rivian also, released the fact that they're raising guidance and production is scaling as expected. Um, so yeah, I don't give too much weight to it.
You're right. I mean, the stock has fluctuated. I think they're up almost 20% the last month, and so it's. But yeah, that makes sense to me, and we'll kind of see where that nets out. But I did want to get into a more interesting conversation. So I want to talk, and you alluded to about it a little earlier, but the R2 and why it matters so much. Reading through your research, it really felt like this wasn't just another vehicle launch, and that it really might be the most important variable in the entire Rivian investment thesis. And when we had first planned this episode, most of the evidence was qualitative. I think there was some reviews and reservations and some YouTube enthusiasm. But since we've last planned this, I believe we now have some commercial evidence too. And you can correct me if I'm wrong, but what I wrote down is I think they've delivered over 12,000 vehicles in Q2, raised their delivery guidance. Does any of that material change your confidence in the R2 thesis, or you still think it's too early and you want to see kind of how things go?
I think it's a good step in the right direction. The one thing that I would also urge your listeners to understand is that I fully expect them to the demand to be stronger than the supply. I need them to raise guidance. I need them to deliver where it's not just meeting the expectations, because when you're launching a new product, right, you capture a larger share of your customer base who was initially interested, who have signed up for years ahead of time, or even maybe months ahead of time if you did the marketing right. And once that is captured, the numbers should reflect the fact that, hey, the management was conservative. And I hope to see that continuously, just like we saw now with the raised guidance. It's a really good step in the right direction. I think it's too early to make any definitive judgments on it, but this is exactly what we want to see as investors in Rivian.
Well, okay, that kind of hits on also where I think management noted that they expect about 50% lower bill of materials and maybe roughly 50% lower non-BOM costs compared with the R1. So how much of that cost down comes, you think, from manufacturing simplification versus, what they're doing with supplier scale and then purchasing power, of course?
Yeah. So this this is probably the one piece where I was so glad and surprised that management released, because they essentially gave the bits and pieces for the formula that I put together in regards to, how much does it actually cost for the R2 to be produced. So the management's so let me start with like the conclusion first. I think that the vehicle's cost of goods sold for the R2 is going to be about $57,000, 57.6K if we're being very specific. The how I'm breaking all of this down is through the two categories. This is the bill of materials, which is everything that actually goes into the car. This is the parts like the battery pack, the harnesses, the wiring. They make up about 70% of the total cost to produce a vehicle. The the non-bill of materials, which is the rest of the 30% to produce a vehicle. This is the factory overhead. This is, the labor costs, and everything that needs to support to create the vehicle. So there's two things that the management said, which is one, which you said, that the non-bill of materials will be at least 50% cost savings, um, which is from the R1. Then the bill of materials, what they said is, here's the nine components, and here's the estimated number of either cost reductions where available or part reductions that we have. And taking those nine components, part savings, multiplied by the weight of how much they contribute to the bill of materials. So, for example, the underbody structure would be about 20% of the total vehicle's contribution. And they said, it'll be about a 30% cost savings, which then we derive 6%. I think I'm throwing away too many numbers here, but in essence, I took the number of the part savings that management itself provided, multiplying by the contribution of the part to the vehicle, and I derived about a 34% cost savings driven from the bill of materials, which is how I got to the 57,600 cost of goods sold per R2. Um, and the big deal here is it's materially cheaper than the R1 cost, which was about $93,000 per vehicle.
No, that's fantastic, and I'll say on this podcast, you can never have too many numbers. We love, we love numbers, and I was what you said makes logical sense. I'm really impressed that you were able to kind of do that. So then, from a pricing perspective, and what is the kind of the average price they're targeting for that R2? You mentioned cost of goods sold. How does that kind of balance against the price that they're targeting? I think we mentioned that with the R2 that they wanted a little bit more uh, mass produced and a little bit more available to everyone.
Yeah. So the assumption that I made into the actual average sales price was also derived from R1. So when I broke down the total, the base MSRP for like the R1, it was about the blended rate was about $75,000. But when you look at their financial statements, the actual average sales price was coming out to be about $87,600. So there's this other assumption that I've made, that where the customers that are ordering the cars, they would add on things that is like a different wheel trim, a different color, any different type of configuration, like the accessories and the add-ons that they would add on to go to purchase a vehicle above the starting price. So in this case, the average sales price that I'm assuming was about a 17% uplift. Then the average sales price that I'm assuming for Rivian was about 17% uplift than their starting, which is going to be resulting in about $66,000 of ASP. And this is essentially where we now see the flip to gross profitability, specifically driven from the automotive segment. This is the key part why R2 is so important, is because of the savings, 50% savings on non-bomb and 34% savings on BOM costs and add on to a higher ASP, we now see the automotive segment without software subsidizing it actually flip to gross profitability, which I estimate it's going to be about a flip to 24 million gross profit per quarter versus the negative 62 million loss that we had in Q1.
I mean, that would be huge. And the stock is already, I was just checking, it's got some nice momentum here in the last 3 months. It's been beating SPY. And if that kind of comes to fruition, it definitely could be a positive there. And, I also wrote down, I'd be curious with the R2 and watching the YouTube videos, and I've seen them out on the, all the Rivians out on the road. Uh, I would have to imagine that customers probably add on more than maybe other cars. Like I'm thinking with what I drive, and if I were to get one, I would, there's some camping things that you can get. And I just wouldn't be surprised that if customers adding on a little bit more than they would the average car. So I'm glad that you called that out too with the lift. And then you touched on it a little bit. One thing I was thinking with the R2, and you mentioned the small business owner, but I really think they could become a more meaningful segment. And do you think there's any chance that that the market is underestimating demand outside of that traditional consumer buyer?
I do think so. I really do think so. And we're coming to a stage where gas prices are not as stable as they were in previously. We're coming to a stage where electric vehicles are seeing more adoption, not just because of the functionality or capability, but because of the infrastructure is there, which is so critical, right? Like you see electric vehicle charging stations all over the place. Homeowners, they can, just like me, install an outlet to their home that brings up charging from 5 miles an hour versus the standard outlet to, for me, it's like 25 miles an hour. I think because the combination of the utility and capability, like the anecdote from the small business owner was saying, is there, and the infrastructure is there. I think you're right that it's not being priced in just how valuable it is for small business owners to be able to utilize a truck to go and do their landscaping job by day and then take their family out to dinner by night.
Okay, the next thing I want to talk about that I thought was maybe one of the most interesting parts of your thesis was the Volkswagen partnership. Could you explain in simple terms what they're actually paying Rivian for, and then how maybe investors should view this partnership?
Yes. So, to give you a brief history and context of why Volkswagen chose Rivian. So previously, Volkswagen, they tried to implement a technology to reduce the number of parts and reduce the number of external supplier dependencies in-house. They did this through their business unit called CarIAD or Car IAD. They essentially poured a few $1 billion into it to develop a zonal architecture, the same one that Rivian is now developing for them. So the way to think about it, the way that I think about this is Volkswagen poured billions into it, couldn't make it work. But the technology is so important that they didn't back down. They said, we have to make this work. This is the next natural evolution of car making. And they started licensing from Rivian. Now, what Rivian is essentially providing at this point, what zonal architecture even means, is they are reducing the number of parts that go into a car. And because you're reducing the number of parts, you're reducing the number of suppliers that you have to pay for. And because you're reducing the number of suppliers, you're reducing the number of dependencies. So the zonal architecture that Rivian is doing, more specifically, it's eliminated 2.3 miles of wiring. It cut the connectors by 60%, and for its R2, and consolidated 17 electronic control units. These are essentially the brains of the car down to seven, which is partly why it costs half as much to build. And these are the specifics and the vision that Volkswagen is buying from Rivian because, again, it's the next evolution of car making. It's a simpler, more seamless car.
That really is very interesting, and it kind of makes me think about could that architecture eventually evolve into broader licensing opportunities in auto or even industrial applications?
Yes, 100%. So this is the essentially external proof from the world's largest automaker that yes, it can be licensed. And RJ also, he pretty much he didn't specify, he didn't answer it directly, but his ambition on platform licensing was pretty clear. He's gonna move the vehicle architecture away from what I just described, a fragmented, supplier dependent system, toward a single upgradable code base that reduces the supplier coordination costs. And he's gonna license out their RAP1 chip, combined with their large driving model platform, to third-party manufacturers across multiple vehicle models. So this is part of the revenue stream that RJ is unlocking. We're going to build the autonomy stack, we're going to build a zonal architecture, and you know what? Everybody else can license it from us.
Yeah, that's very interesting. It kind of transitions into the next topic I had, which was, if you want to call it their second business, the software services. And I'm not sure if that would be included in there, but when I was reviewing the charts, I found it really interesting that revenue and gross profit for software and services revenue was moving in a much healthier direction than the core auto business. Although I think R2 will definitely, as you mentioned, help there. But how important is that software services segment to the overall thesis too?
It's quite important. The way that I think about it is the hardware, the business, the R2 and the other lineups are essentially going to provide the financing engine, the revenue, the foundation for Rivian's success, while the software and services business is essentially going to add on to the gross profitability for the company as a whole. It's already, according, like, with Q1 numbers, software services is about 181 million quarterly gross profit at 38% margin, while the auto businesses was losing money. And the software segment is also growing 49% year over year. The thing with the software is it's the majority of the revenue currently from software is coming from the joint venture and the licensing fees with Volkswagen. But as the large driving model, the autonomy plus subscriptions, lifetime fee, you can pay a lifetime fee of $2,500, or I don't remember X amount. I think it was $50 a month to get the self-driving experience. That's going to continue on growing, which RJ is also promising that by next year we're going to have both eyes off and hands off capability for the cars. So this segment right now, it's carried by the Volkswagen licensing fees, but in the future it's going to be added on with the autonomy plus subscriptions and potentially other deals with other companies. So all of that to combine, the software is going to continue adding on the profit margins on top of the hardware business.
Appreciate you laying it out like that, because when I was going through the research, thinking of it as at first maybe just a funding bridge, helping the Rivian survive until the R2 scales. But then you really see the potential as a emerging software business within the larger company. So you also mentioned in your research, maybe even I thought the Volkswagen was interesting, but perhaps the most interesting long game aspect is Mind Robotics. How should investors think about that initiative? And is it, one of the things I really like in companies is that optionality, especially now with AI and factory automation. What are your thoughts on that? And is it still probably too early to matter financially, but something we should think about strategically in the future?
I love the Mind Robotics spinoff. So for some brief context for the viewers, they RJ spun off the robotics division of Rivian in late 2025 into a standalone company called Mind Robotics. Rivian has a 38% stake in it, and the way to think about this company is they're manufacturing. Well, okay, they're going to be developing and producing robots, specifically targeting a niche segment of solving the manufacturing labor shortage, which, according, to any study that you find, it's generally around a 30% labor shortage and solving the manufacturing labor cost, which, depending on which source you use, it could be anywhere between 25 to 30% of the factory overhead, the actual labor costs. So this is also what I like is it's again, they're pinpointing a very specific need in the market to address. They're not just going, we're going to solve all of the problems. We're going to, not setting out a grand vision, but no, we're solving a very specific labor cost, manufacturing labor cost, and manufacturing labor shortage problem. The now that's the context. The cool thing about this is they are their own customer and they are their own developer. They have no dependencies. So one of the biggest things in model development is the better data that you have, the more access to data that you have, the smarter that your model is. In terms of an LLM, right? So if somebody is deciding to develop an LLM and they're using a commonly shared repository, such as like a common crawler, they're going to be exposed. The LLM is going to be exposed to a ton of, you know, inappropriate content that's posted on the internet. This could be racist, sexist, homophobic, whatever. But if you have the proprietary data sets that allows you to only retrieve high quality data sets to train your LLM on, you're going to have a model that is levels above and smarter than your competitors. Now, tying this back to Rivian, they have factory production data that they themselves own, that they themselves are feeding Mind Robotics development. So everything in terms of how fast the car is being put together, where the part defects are occurring from, or how the factory production floor is laid out, as simple as that, or anything like from shift changes. How do you accommodate the current labor staffing in these factories? All of this is data that's available to Mind Robotics because they're essentially the same company. And you might have robotics companies like Figure AI, the humanoid robots and everything, that is within the same competitive segment. But Rivian has the factory, which is something that I've been trying to emphasize on some of the X articles, is that if you have the data, you might start off being last place, but very quickly you will do leaps and bounds to become first place. And all of this feeds into Rivian's long-term game plan of reducing the non-BOM costs, right? The further reducing the 50% savings to maybe 60% savings, and also servicing other customers as well.
I'm glad you mentioned the non-BOM costs because I think that's really how you generate that operating leverage. And it's super interesting because the other, I hear NVIDIA talking a lot about robotics too. And I really like how you mentioned that Rivian's using it for their own, like you said, they're their own customer. And eventually people are going to start taking notice, I think, and being curious about what they're doing. Or like you said, they'll just gain a competitive advantage potentially in the marketplace. So it sounds like this is something that maybe we should listen to on earnings calls and see if there's anything mentioned about it and press releases. Very interesting there. And then before we get into valuation and some final thoughts, wanted to mention one thing around some of their strategic backers, specifically Amazon. So I know, and you mentioned earlier that they helped validate that commercial van opportunity early on, and I see them actually at our house almost every day, I think. So how important is that business now versus we'll call it the consumer R2 opportunity as well?
The It's extremely important, and so the way Amazon was for many years the largest shareholder. Now they've been overtaken by Volkswagen, which I think they hold about a 15% stake. And Amazon, although they didn't sell shares, they were diluted down to I think about 11 or 12% share. The Amazon as an enterprise customer is important because it provides that constant revenue of a very specified set of parameters and contract that Rivian will deliver on, and Amazon has agreed to ahead of time. Right? They're not beholden to any changes in customer feedback or anything that might require significant changes in manufacturing. So this is the way to think about like a stable revenue base. that's going to continue on generating revenue because Amazon as a company is essentially going into directions of being able to service all of logistics, right? Amazon recently launched their logistics as a service initiative where they want all of the businesses enterprises to use their services, to use their network, to grow their own business. Amazon itself is, I'm getting my items grocery within a few hours. I'm getting and customers in urban areas or sorry, rural areas are getting their items faster than ever before. So Amazon, as one of the greatest fulfillment companies, are growing and getting faster. They need these vans to fulfill that expansion. And then also reading between the lines of what RJ was talking about Amazon is yes, it's their most important customer and they remain committed to servicing its needs. But when the analysts press them about if there's any other big signings, RJ still reiterated the focus on Amazon while mentioning there will be future opportunities for big partnerships outside Amazon. And my translation of that is, guys, we are fully booked up and we cannot afford to lose our biggest customer and shareholder. And once we deliver on our commitments to Amazon, then we will sell to others. And I think that's for me that was my interpretation, and it's the most logical next step because after you fulfill your obligations, you have so much more e-commerce companies, so much more use cases. You have the Walmart, you have the Target, and they need a capability similar to Rivian, and Rivian, with its scaling of capacity, is going to be the one to fulfill those needs.
Yeah, I like that because I think when you first look at the company, you think maybe, the R2 is the entire investment thesis, but then when you start to learn more, you realize there is some different aspects to their business. And I was just up in the mountains and found out that if you do move up there full time, only Amazon, UPS, and I think FedEx will deliver. The postal service doesn't. So I could definitely see where Rivian would be needed even more in the future for these places that are remote. And a little bit of valuation, and then we'll call it market expectations. Based on sort of the peer work that I looked at, Rivian sits in this kind of awkward place where they have stronger revenue growth than many of the traditional automakers, even Tesla and Ferrari. But right now, they're not quite the same on profitability. Is that why you think the valuation debate's so hard? And then, how are you valuing them right now, or how should an investor interested in the company maybe think about them from a valuation perspective?
Correct. Valuation is very hard. And the issue with it is 2026 and probably early 2027 is the show me moments for the market. You invested all of this money into capex, into product development and capacity. Now, what do you have to show for it, right? So for example, I'm estimating it's going to be about 10,000 R2s delivered in Q3 and Q4. If you value it just on that, that's nothing. Tesla is delivering on a quarterly basis 300,000 plus cars. So what capacity will Rivian reach? Oh, well, their production capacity at full capacity is about 200,000 units annually. Do you value it at that? Or what if they don't reach it? What if they exceed it? What if they're again capacity constrained beyond the 200,000? So there's a lot of unknowns on the what ifs, but the knowns that I have that I know today is we are in a stage where the hardware math, the unit economics checks out. We're flipping to gross profitability. Software is there to add on the incremental gross profit to the company. You have, long-term games of mind robotics, midterm plays with Amazon and other enterprises. I guess what I'm trying to say is the sum of all of the bullish cases is there. Now, I really think we just need time. We just need time for these things to play out, and it's going to really help shape, okay, which direction are we going? Are we going to, if we see continuous raises in guidance in deliveries, quarter over quarter, year over year, you start understanding, okay, now we're reaching the upper limit of your 200,000 annual capacity. Are you going to go even more? Oh, they announced another facility. it could go in so many different ways. But in short, I think everything that we need to have a high, for me, to have a high confidence that this company is going to be successful, profitable, and scaling, they've proven that they already have it. Now they just need to go out and execute.
When I was looking at valuation myself, they're definitely one of the hardest companies to value. I first looked at EV to gross profit, but since the company has only recently crossed into positive gross profit, I don't think there's enough history for that multiple to be very useful yet. So instead, I think maybe like a forward EV to sales is probably the best quick and dirty framework today because investors are really underwriting the next few years of execution rather than current profitability. And then as of July 11th, they were trading at roughly 2.6 times next 12-month EV to sales, at least according to Fiscal AI. And that's well above traditional automakers like GM and Ford, but still dramatically below Tesla at roughly 13.6x and Ferrari around 7.5x. So to me, that suggests that the market is pricing Rivian as something between traditional automaker and a premium software-enabled platform. And then we'll finish out with a little bit of a lightning round. So a few quick questions and answers. If we were sitting here 3 years from today, what does success look like for Rivian to you?
It's R2 scaling profitably with positive unit economics. It is software revenue continuing to grow rapidly. We saw 49% year over year. I want to see that continue to be sustained. I want Rivian to be issuing its official autonomy licenses in production vehicles. Volkswagen is uh, let's say this: the zonal architecture licensing. Volkswagen is starting in early 2027 with their cars, and then I want them to transition to being able to license out their autonomy stack as well. Um, Let me see, what else do I have? Of course, achieving positive free cash flow. I think that's going to be a big catalyst for them, and that the stock will actually reflect the overall platform value, not just look at them as a car manufacturer.
And then what would change your mind on the thesis?
If R2 demand is weaker than expected, or the unit economics miss by a wide margin. So if R2 demand, for whatever reason, comes lower than expected, and they have all of this capacity, all of these loans, all of these expectations, but nobody to buy them, I think there's going to be absolute extreme pain for Rivian. Then the other piece is if the unit economics, either due to capacity constraints, launch failures, quality defects, ends up being still costly and they're still losing money per vehicle per R2, then that's also my invalidation criteria.
No, that's great. And I think that's going to be very helpful to a lot of listeners. So, last one, this has been such a great conversation. I've really enjoyed just picking your brain on such a fascinating company that really is doing some great things out there and changing the auto landscape. So, just tell listeners, where can they follow your work? And is there anything else that you want to leave them with on Rivian?
Thank you for this opportunity. First of all, I also likewise enjoyed our conversation, and I think this might be my first experience as an interviewee. So I'm glad that it was with you. It was a very pleasant experience. Viewers can find me on X. This is where I post all of my thoughts, my theses, and analysis. Position journal, all one word. I do have some Substack, but it's just to essentially compile some of my thoughts all into one clean thesis as well.
That's great. And we'll put your information in the show notes so listeners can check it out too. And that wraps up my conversation with Position Journal on Rivian. After digging through the research, watching some of the R2 reaction, and seeing Rivian's vehicles in person, I came away thinking that this company clearly has product and branding strength. But now the real question is whether Rivian can transition from a cool premium EV company into a scalable, economically viable, automotive and software platform. And those are very different things. So this is definitely a fascinating company to follow from here. If you enjoyed this episode, follow the podcast, leave a review, and share it with someone interested in EVs, autonomy, or the future of automotive software. Thanks for listening, and I'll see you in the next episode. Until then, keep your process sharp, your standards high, and your portfolio intentional.